Hey traders, Jason here from Leavitt Brothers. In this video, I'm going to talk about some oil setups and trades we've profiled at Leavitt Brothers. This is not meant to be a video we use to brag about what we've done. Instead, it's supposed to be educational. We've nailed many great trades in the oil space, and I want to show you how we found them and what we look for so that you can go on your own and find your own trades, if that's what you want to do. We started talking about oil during the summer. In fact, on June 24th, we wrote a report where we profiled a couple of charts that were starting to perk up and turn the corner. I'll talk more about the sequence of events that played out in a few minutes, but first let's discuss some of the charts that we've played recently. Okay, here's Oasis. Okay, it jumped on our radar in the second week of September when it had been in a long base. It out of nowhere it surged on big volume. It got above its 50-day moving average. It got above its a short-term resistance level, and then it got turned back by a longer-term moving average. In our eyes, this is perfect to have a nice long base and then a sudden explosion in volume, and then to get turned back by an overhead resistance line. That's great. That puts the stock on our radar. At that point in time, we're looking to play a breakout, or we're looking to play a dip back to the moving average or back to some other moving average on a different time frame chart that may be more telling. Okay, so after we profiled the stock in September, it actually broke out. It didn't go too far. It only went from 8.5 to 9.5. Then it consolidated for about 5 weeks. We continued to profile it. We continued to talk about it. We continued to talk about how healthy the overall pattern was. For a stock to run off its low on big volume, consolidate for 5 weeks, while the 50-day moving average starts trending up and starts acting as support, that is a perfect situation for us. Then the stock started to break out, and you can see what has happened the last couple weeks. It's been a really good one. It ran up to its 200-day moving average, paused for 3 days, and then it moved again. And this chart is as of yesterday's close. Okay, so this is one of our stocks that we've played. Let's go to another one. CVE was another one. In early September, we profiled it. These volume surges don't look too big because you got this big one over here that distorts everything, but you had a move off the low on pretty good volume above the 50-day moving average. It comes up to a previous high, then it consolidates. This again is a really good situation for us. For it to move up on strong volume, rest right beneath a previous resistance level, that puts it in play for us. That puts it on that puts the stock on our radar. Okay, we were looking to play a breakout at 8.5 or some sort of a dip that either comes back to the 50 or some other moving average that has proven to be significant. Okay, as it happened, it broke out at 8.5, ran all the way up to the 200-day moving average, and got turned back. And then it spent about 5 weeks just drifting down on light volume against the newly formed uptrend. Again, this is a perfect situation for a stock to explode on big volume, then to drift down on light volume while the 200-day moving average continues to move down and acts as resistance. The 50-day moving average comes up, and then the next move is boom, it breaks out and runs. Okay, this is another one of our trades. We were in it twice. Once at the breakout here at 8.5, another time as it bounced off the 50-day and then exploded here because it broke out through resistance and the 200 at the same time. Okay, let's move on to another one. Here's WLL. Again, a nice long base, got our attention in September when it moved up with force on big volume here. You can see big volume, steady volume day after day. A couple small volume days. For the most part, you have really big volume days. It gets rejected by a previous high just under 6, and it starts to consolidate. So at that point in time, the stock is on our radar. We're looking to play a breakout. We're looking to buy a dip to some sort of significant moving average. As it turned out, it kept dipping, found support at the 50-day moving average. Then it bounced with force, with big volume. So again, it was on our radar, and then it broke out recently and ran all the way up to the 200-day moving average. Okay, and again, this chart is as of yesterday's close. Let's look at another one. Here's CRC. Okay, beginning of September, it showed up on our radar. It got above its 50-day moving average. It was the first time in several months, even though the 50-day moving average was slanting down, and even though the stock broke out but then started to drift down, we still consider it valid. Okay, it takes a lot of energy to take out the 50-day moving average. Then the stock needs to rest. At this point in time, it's on our radar. We view it as a potential candidate So we start profiling. We start talking about the possibilities. We start talking about entries and where our stops may be in different scenarios that might play out. Okay. The stock, after that little consolidation pattern, you can see that it ran up huge with big volume. This is a game changer, okay? Instead of this being a bounce within a downtrend, this is a big enough bounce on enough volume that it's no longer a bounce within a downtrend. It is the beginning of a new uptrend, okay? So we're in this move. The stock consolidates for 4 or 5 weeks. It ends up taking a little bit of a dip here to its uptrending 50-day moving average, okay? And then it takes off and explodes. It moves up with force on strong volume right up to the 200-day, pauses for a couple days, and then breaks out again. Okay, and this was another stock that was on our list. We have many of them. Okay, there were a lot of oil stocks that look very similar, where they were weak, they based for several months, they moved up with force, they moved sideways or down on lower volume, they waited for an essential moving average to come scoop it up, and then they took out either a significant moving average overhead or a resistance level overhead, and they legged up again. Okay, many stocks look like this. Let's look at a couple more in less detail. SM was another one of our trades. Big move off a low, strong volume, consolidate for 5 weeks, breakout again. It's nice right here. You can see the 200-day moving average is very close to resistance. That's a nice 1-2 punch, because a lot of times if you have resistance here at like 19.5, but the 200's up at like 21, sometimes it takes so much force to get through resistance, then there's not enough energy left over to take out the 200. So oftentimes it'll move up, but then it'll actually have to rest before it moves up again. In this case, it was able to take out the 200 and resistance at the same time. CRZO, another one that we played. Okay, it moved with force off of a low, hung out right here at the 50-day moving average, moved up with force again, drifted down on a light volume, got scooped up by the 50-day moving average, and then bounced with force again. DVN, similar pattern. Okay, gets above its 50, fails, gets above its 50, but here you can see on this next attempt it comes back down but actually finds support. Then it takes out a resistance level on strong volume, rallies almost up to the 200, drifts down for 4 weeks, and then obviously takes off again. There are many stocks. There were many more that you could have played. You couldn't possibly have played all of them, but even if you just picked a couple, there was a lot of money to be made. Okay, this is what we do at Leavitt Brothers. We find the bull markets. Okay, we look beneath the surface and find the groups that are either leading or starting to turn the corner, and then little by little, as the chart's set up, we profile them. In fact, let me show you the sequence of events that started over the summer. I'm going to drag our website page down. This is the leavittbrothers.net. This is a page within the leavittbrothers.net subscription. You can see trading ideas here is highlighted. You can see these are reports for 2017. And we just list all the reports here. They're available in PDFs, so you can just click on it and download them. You can see if I go all the way back to June 24th, you can see a few oil charts are posted. A week later, oil stocks are reviewed. June 15th, select oil stocks are starting to turn. A few days later, I did a special report all about oil. June 29th, oil might be turning the corner. Okay, a week later, select oil stocks continue to look decent, and it goes on. Okay, it was talked about again on September 16th. September 23rd, oil remains a group in focus. Okay, talked about it again September 30th. October 28th, today's report focuses on oil. November 2nd, all about oil. And then just this past weekend, I said this report covers a few random ideas, but oil stocks are much higher on the list than these. Okay? Pretty simple. Okay? This is what we do at Leavitt Brothers. We find the bull markets, we look beneath the surface, and we find the groups that are either leading or starting to turn a corner, and as the charts start to firm, we start to profile them. Okay? It's very simple. For the Trading Ideas report, all reports are simply listed with a brief description, as you can see there. So we started to profile oil during the summer, and as the group improved, we profiled the best setups within the group. Then every week, or every other week we updated the charts. We add new ones when needed, and generally speaking, we keep our subscribers attuned to what's going on so they can enter positions and make money. This is what we do at Leavitt Brothers. Okay, groups run hot and cold. We find what's hot, we bring it to your attention so you can make money. We can save you a lot of time by finding the best stocks in the best groups. One good trade pays for your subscription for the entire year. Come check us out.